Coinbase stock crashed on the first day of trading and everyone had it wrong. Most people fell into either two categories. Category number one, you believe that Coinbase was going to pump and then continue to pump. And category number two, you believe that Coinbase was going to pump and then eventually come back down. But neither of those happened. Instead, Coinbase opened and immediately it came crashing down. And in this video, we are going to discuss the two reasons why Coinbase stock crashed, and it is very important that you pay attention because what happened was not a one-time event. Yes, Coinbase stock initial offering already happened, but what we will learn in this video will also apply to the future, and hopefully you understand what happened so that you can protect yourself in the future. Welcome aboard the Bitcoin Express. My name is Chase. Let's get to it. The Coinbase public offering was one of the most highly anticipated public offerings of all time. Yet, first day, it was a failure. If we look at the 15-minute chart, we can see that Coinbase opened up at about $381 per share, and it went up for about 30 minutes, that's it, and then it came crashing right back down. I wouldn't even consider this a pump and dump, right? That would imply that it went up for maybe at least an hour, 2, 3 hours, 30 minutes, and it came crashing down right away. This doesn't really make any sense. So why did Coinbase stock crash? And that brings us to reason number one, which is the major reason why it crashed. And it has to do with the type of listing that Coinbase was. When we talk about the Coinbase IPO, technically it wasn't an IPO, it was a direct listing. And this became a topic of debate in the crypto community. Who cares? Public offering, direct listing. What's the difference? It's all the same thing, except it is an extremely important difference, something that I spoke about in a prior video. When it comes to an IPO, new shares of the company are created and are underwritten by an intermediary. So when it comes to a traditional IPO, you go to Wall Street, you pay them the big bucks, they do all the work for you. So what do they do exactly? Well, they help in deciding the initial offer price of the shares, helping with regulatory requirements, buying the available shares from the company, and then selling them to investors via their distribution network. So this is the way that it used to be for the most part, traditional IPO. But now companies are doing a direct listing, and as the name implies, you go directly to the consumer without using these intermediaries. And when it comes to an IPO, generally they're risky, but something that makes them a little less risky is that existing shareholders typically have a lockup period of 6 to 12 months. And this protects new investors so that the creators, the early investors, the employees do not dump their shares on you. And this is something you should always look out for also in crypto. Forget traditional IPOs for a moment. You should always understand what's going on. When it's released, will there be a portion locked up? Because if not, the founders will dump on you. Now, when it comes to a direct listing where you do not use any intermediaries, you go directly to the market, there are no lockups. The existing investors, promoters, and any employees already holding shares of the company can directly sell their shares to the public, meaning as soon as it is listed, these early investors who made a lot of money, they can immediately sell, no lockup period, and that is exactly what they did. Coinbase made a lot of people millionaires and billionaires. As we can see, the people that profited the most from this is, of course, the CEO Brian Armstrong, Mark Andreessen, Fred Ursum, Fred Wilson, Nas, Ribbit Capital, Tiger Global Management, and many others. There was a story about Gary Tan who put in $300K into Coinbase in 2013. It is now worth $2.4 billion. A lot of people that work at Coinbase became rich because of this listing and they wanted to take profit. And on top of that, Coinbase surprised all 1,700 of their employees with 100 shares. So at the time of listing with Coinbase at about $381 per share, this was about $38,000. And I think the thing that most people missed is that we believe that if you work at Coinbase or you're an investor in Coinbase, you're in it for the long run. But in the end of the day, we live in the United States, which is an individualistic culture, meaning every man for himself. And when it comes to Coinbase, most of the investors and the employees are from the United States. So at the same time, you can believe that Coinbase is the future, it's gonna make you more money as an investor. But at the same time, you might want to take profit, and that's what happened in this case. Again, this wasn't your traditional, it went up for an hour, 2-3 hours, 30 minutes tops, and it came crashing down right away. People wanted to take their profit, understandably so. And this is different, for example, than places in Asia where they have a culture of collectivism, where people work for each other. So this is what happened. I think if I was in this position and I was working at Coinbase as well, that I would also be selling some of my shares, even though I do believe that in 5-10 years from now, Coinbase will still be a valuable company. And like I said, this is not a one-time thing. We will see in the future other crypto companies going public. Coinbase opened the door, and already we can see that Kraken plans to go public via direct listing. Remember what we said, IPO versus direct listing. So we will see more crypto companies in the future go public, and likely through a direct listing. And as we know, direct listings are even more risky than traditional IPOs, which are risky in themselves, which is why I said in a previous video, I'm not touching the first day of trading. I will wait for it to settle. And even today, as I make this video, who knows what's gonna happen? Is it gonna go up or down? Again, I'm gonna wait for it to settle before I actually make an entry. So that was reason number one. That was the major reason. But on top of that, something that added to the story and also added to the crypto markets being stagnant yesterday is that $623 million in Bitcoin from the 2016 Bitfinex hack was moved. And every time we see money moved from a dormant wallet that has not been used in, say, 5 or 7 years, the market gets scared. They think, what are they doing? Are they going to sell that and dump the market, cause it to crash? And then on top of that, the market also gets nervous when they see money from a hacked wallet, or in this case, Bitfinex was hacked, it's in a wallet now. When they see that money move, they also get scared, and we had it all in one. And I believe this was a coordinated attack. Why? Because out of all of the days that this person could have chosen to move their Bitcoin, they chose the exact day that Coinbase went public. Not only the exact day, but during the same hours. I do not see any other explanation for this. Maybe you guys do, so let me know down below. So I believe this was a coordinated attack. And this is not the first time this happened, right? It happened in the past and it will happen again. We will see dormant wallets holding a large amount of Bitcoin moving in the future. And a great place to check up on this is following Whale Alert on Twitter. He's always posting what's going on in crypto in terms of transfers, and he was covering this yesterday. $19 million worth of Bitcoin stolen funds transferred from Bitfinex hack 2016 to unknown wallet. 1.4 million, 37 million, 17 million, and so on. He covered this. So as we can see, this was definitely, I believe, coordinated FUD. But the reason why it's not really going to move the market as much as it should is because Bitcoin has grown so large, and it's very hard to cash out of that Bitcoin anonymously. As this tweet states, no, the Bitfinex hacker can't sell the Bitcoin, not in any volume. And when he says not in any volume, what he means is this hacker can sell this Bitcoin, but if they want to sell a large amount, it's going to be very difficult. They can go ahead and sell, 100 here, 1,000 here, 2,000 here, but that's not enough to move the market. This is what happens with Bitcoin, being that it is so large. The more Bitcoin grows, the less impact stories like this one have on the market. But this would be different for a smaller cap altcoin. If you have an altcoin that's worth $1 billion total market cap and someone moves $200 million worth of that crypto, that definitely can impact the market. And when it comes to this specific story, as this tweet states, but he, she, they can move it to try to manipulate the market while they short it elsewhere. So this was definitely, I believe, again, a coordinated attack. It happened in the past and it will happen again. And the reason why this video is important is because, like I said earlier, this wasn't a one-time event, right? Coinbase, that's history. It went public already. We're going to see it in the future again. We're going to see other crypto companies go public. Likely, we will see them doing a direct listing. And as we know now from this video, direct listings are even more risky than a traditional IPO. And we also know that as we continue to go on this road of Bitcoin, there's going to be roadblocks along the way. We will have these movements from these unknown wallets, these dormant wallets that have not been moved in many years. The one that I am a bit nervous about, right? I think it definitely will scare the market is if the wallets belonging to Satoshi Nakamoto move Bitcoin. I think that actually will scare the market a lot. I don't think that will ever happen. I don't even know if Satoshi is alive anymore. So we'll just have to wait and see if that ever happens. So you guys know the 2 reasons why Coinbase stock crashed, and hopefully you can apply this to the future when we see other crypto public offerings. Like this video, subscribe to the channel. Thank you for listening, and I'll see you next time.